Last panel, please bear with us. It's legal and regarding cryptocurrency and crypto assets. Everybody, I'm sure, knows Sally Ranney. She's a co-founder and president of the American Renewable Energy Institute. She's also the CEO of Stillwater Preservation, a wetland mitigation banking company, and serves on the Patrons of Nature of the IUCN. Sally is also a founding board member of International Investment Holdings and on the executive board of a Climate Accountability Institute. With 40 years of experience in land, water, energy, and climate change, Sally has worked with 3 U.S. presidents, including an appointment by President Reagan to his Commission on American Outdoors. She is a recipient on numerous awards. She will be moderating a panel with Chris Marston, who's the CEO of Exemplar, and Exemplar is a professional knowledge firm that integrates law, tax, CPA, investment banking, business strategy, and international structure to serve revolutionaries, game changers, and eco-social entrepreneurs to help them accelerate and exponentiate their success. Also with Mark Chasan, who is currently a managing director of Exemplar. Exemplar is also advising on legal aspects of ICOs and token sales. Please, Sally, you have the panel.
Okay, great.
Thank you, Anya. Thank you.
Thank you. Thank you for hanging in here so late. So the best definition, I just wrote it down, that I've heard about blockchain and token sales is digital viral financial system based on abundance. And if you recall, if any of you were here earlier when we were talking about, I mean, that's a real flip in the paradigm. If you were here earlier in the day and we were talking about the system's been based on fear and scarcity and competition instead of collaboration and abundance. And so this is a real flip of the paradigm. And I love the fact, I've learned a lot tonight, that it's based on natural system design. Now, we're going to get into some of the, not boring, but the really important stuff, the legal implications of financing token sales and blockchain. And so when you look at the characteristics of blockchain and token sales, besides being totally transformational and a paradigm flip, it's a disruptor, it's potentially volatile, it's borderless, so that facilitates more trade flow. But then there's questions about monetary policy. It's self-organizing, as we said. There's $100 billion in circulation in cryptocurrency, and the IRS just recently in the United States qualified it as property. So there's potential tax implications, and the SEC recently came out with some interesting rulings as well. So there are a lot of legal implications. So either one of you can answer this. What would you say that an investor needs to look out for as far as if they're going to go into a cryptocurrency? What do they need to be aware of? And what does the company that is issuing a token need to be aware of? Because regulation is coming. I think everybody knows that.
Actually, regulation has been here since the 1933 Securities Exchange
You were telling
Act.
me that earlier.
So regulation with securities and taxes have been here for a very long time. And the question is what is the interpretation of the token? What is the interpretation of the ICO by the existing regulatory environment? One of the things that I find interesting is people think that just by tokenizing equity or by tokenizing access that all of a sudden the world has changed and the regulatory environment somehow didn't exist. And while 2015 and 2016 may have shown that people were getting away with raising, tens and hundreds of millions of dollars in ICOs, many of those people will probably be in orange jumpsuits in a few years or have rescission actions. So in essence, what we're looking at is tokenization, and the blockchain is a way of creating new liquidity for investors. So for example, most investors, they'd either invest in a growth corporation, and they would look for the exit through an IPO or a merger and acquisition. Well, now there's an ability to actually have greater liquidity through a tokenized equity offering. And what has happened, though, is that we really have three different types of tokens. One, everybody says security tokens, but quite frankly, there are a lot of non-equity securities that are now being tokenized. But primarily, it's equity tokens, payment tokens, and utility tokens. So if we were to look at, say, a carnival as an analogy, and you bought an admission ticket into the carnival, that would be an access or utility token. It gets you in. You get to see some attractions. You get to hang out with your friends. But you want to buy food. You want to go to the beer garden. You have to pull out some additional money. That would be a payment token. If you really like the carnival and it's expanding from being regional to being national, and you want to invest it in and own some equity, that would be an equity token. And all three of these things actually have different investment parameters and interests. So, for example, somebody who's interested in investing in a utility token that gives them access to a digital platform would generally be interested in what is the value of the token. Are we going to get that token listed on an exchange? Is it going to have sufficient volume, and is the price going to go up? They really don't care how well the company does. However, somebody who's investing in an equity token, it's going to be a typical equity analysis. A payment token might be, can I actually transact business, get trade leverage, be part of a community, get rewards, create some form of abundant value for myself and the community, and that be able to use these tokens as I would fiat to actually pay for my needs.
You have some additional comments?
Mark did a great job. My background is a bit more fintech, and I'm also an attorney and principal in our investment bank. So I see the financial markets a little bit differently. I see the tokenization. This world is like the fractionalization and gamification of everything. And that's what I see is happening right now. And you have to be a lot smarter as an investor to make heads and tails of a token, because I can tokenize an interest in using my earbuds for whenever they're not being used, because arguably it's economic waste. And there's plastic and materials here that it's going to eventually go in the dump, but right now it's not being used. And it doesn't give it, it may give it a very finite, limited value, and then another token may be derived upon the value of an equity or an asset that continues to increase in value, or solar power or something like that. So investors have to be really smart in understanding what they're buying. And the challenge is that exchanges in this market so young haven't yet got nuanced enough to distinguish between one and the other. So it's a bit of buyer's beware at the moment.
Yeah. So fintech companies that are designing the tokens, how do they migrate now through the regulatory landscape? Because as I understand it, there has been regulation obviously in place, but this is a whole new arrangement. Yeah. And so how do they migrate through, and how would an investor know that that ICO is really secure as far as any legal considerations that might be coming down the road at them?
Well, that's a great question. So, I mean, the first thing is making sure, I mean, counsel, there aren't too many counsel and firms that really are up on this because, and regulation's changing so fast, that the labor it takes just to be up to speed. I mean, you wouldn't believe the conversations and email exchanges our firm has had just during today about FinCEN letters on whether ICOs are MSBs and money transmitters and require money transmitter licenses and all things like that. And Reg S exemptions separate from Reg D offerings and what that allows you to do and can't allow you to do. You really do need amazing tax counsel and amazing legal counsel that's up on this because it's changing so fast. But once it's tokenized, it's very difficult to know whether or not the underlying ICO or company has complied. And so, you know, it does help. You could do due diligence in a normal world with an equity. It's very difficult with an offshore entity that has a website where, you know, we all talk about transparency and the benefit of blockchains, but, you know, it's difficult to find some of the millennials running some of these businesses offshore. So, you know, I don't blame my millennials by any means, but it certainly is an interesting balance.
Yeah.
Yeah, I would say too, it's not only the regulatory environment, the investment environment also is changing. So where it seemed that an investor could invest in a utility token, an exchange would put it up 6 months later, they double, triple their money, it slowed down. And now people are really making decisions based upon who's the management, does the idea actually work? Is the token actually going to be listed? And what's happening now is many of the offshore utility token exchanges are actually saying, we won't list tokens that have ever had the stigma of a security. So if you are selling SAFs in the United States and the SEC says, yeah, under the Howey test, that's a security, then what's going to happen is there's a likelihood you won't get listed, which is slowing down the analysis of investors who want that quick turnaround on a utility token being listed on an exchange. On the other hand, there's many other exchanges that are now complying, getting registered to actually carry and exchange tokenized equities and to do what a lot of the current exchanges, the NYSE, the NASDAQ is doing to help to do public reporting and to ensure that investors have greater knowledge and greater disclosure in the offerings of what the company is doing.
So if I was going to invest, that's something I would want to look at, right?
Well, for the most part, the other countries are looking to U.S. models to understand how to model their own policy and regulation around cryptocurrency, and it'd be because there's safety in the regulatory scheme from their perspective, and how we conduct that, you know, the due diligence and scrutiny, and so it's the irony of the challenges that ICOs are having with trading right now, that probably the most fair and less, you know, I want to say fraudulent, but the more scrutinized they are, the more likely they are to be at least well vetted and on the right footing. And they're the ones having the most challenges getting traded at this very moment. That's going to change. It will change. And we're actually at the forefront of helping design and maybe even create some of these structures for liquidity and security and trading of real equity.
So what are some of those that you're designing?
Well, let me give you a vision of the future, right? American Stock Exchange, anybody heard of does anybody know of an IPO that went public on New York Stock Exchange like recently? New York Stock Exchange or NASDAQ IPO? Recently. Last quarter. No, last quarter. Okay, there's a couple. I don't need to name them, but you know what? If I asked this question 5 years ago and 10 years ago, everybody is raising their hands. The regulatory scheme has become so oppressive that everybody is going to Hong Kong and Vancouver and Toronto and Exchange Frankfurt and everywhere else but here. People need access to the public markets, but the regulation has become so cumulative and so burdensome, nobody's doing it. And so they're all going, it's like medical tourism, right, and FDA, et cetera, so we're experiencing this. The tokenization, and where I see is now tokenized utility tokens, everything else, investors are getting smarter. They want real value. And guess what? You've got all these great companies. You are all here right now at what? It's late. The point is it's late and you're still here. that means we're the ones dedicated to changing this world because you're here. So thank you all for being who you are and doing what you're doing. And, you know, investors are going to want more and more of what you've got and less of a payment token for an escort service. I'm just saying. No, they exist. They exist out there. Look them up. Don't look them up. You have no reason to. The point is people want real equity. And eventually what we see is we're creating a derivative equity. The tokenization of equity is a derivative.
Yeah.
And ultimately, investors are going to want a security that's really derived upon the value of a real business. There are no fundamentals in the market right now. But we're going to eventually return back to fundamentals. Every time we forget where we came from, guess what? Reality knocks us back down to earth. It's going to happen, it's happening, and that's where it's going.
Yeah, you know, the one thing I'd add to that, though, Christopher, is that it's not just equity, and this is the promise of, I think, the blockchain tokenization, is it's actually unlocking liquidity in illiquid assets, one. Two, it also is a way of exchanging value and perceiving value in a different way. Sally, you made a comment about, you know, the abundance and the regenerative economy. The regenerative economy is the largest economy in the history of humankind, and it's knocking at our doors saying, hey, wake up, you know, everything from renewable energy, ag tech, aqua tech, biomimetic materials, waste upcycling. You know, Cisco put out a report a few years back that said that the opportunity for IoT infrastructure in the next 20 years is $40 trillion. Now, I know I sound like Dr. Evil when I'm saying that. I don't throw around the T word very often, but like that's huge. $40 trillion. Biomimetic industries in the next 10 years will be a $545 billion industry that most people have never heard of. How can this new investment vehicle unlock and accelerate and exponentiate the regenerative economy and allow people to engage in platform, engage in community, and to actually disintermediate a toxic greenhouse gas belching supply chain? It's also can be used to incentivize new behaviors. And I think that's the one thing, you know, tech guys talk about technology is going to save the world, and the money guys, money is going to save the world, and the media guys are education and media is going to save the world. But nobody's talking about behavior change. And I think that at the core fundamental basis of transformation is behavior change, and blockchain and tokenomic rewards and incentives for behavior change can actually be massive in transforming our world.
Earlier today, we had a discussion around behavioral science and behavioral economics, and that we really need, all of us who are in this space, really need to understand both of those disciplines really deeply, because it really is what's driving change or will impede it. You know, it can go either way. I want to open this up to some questions, because I know a lot of you really would like to invest in all this, and I probably wonder what the legal implications are for you as an individual. James?
Hi, very interesting. I'm a practical businessman. I build big plants. I build.
We want to hear you.
I'm sorry.
Here comes a mic.
You know, I'm a practical business guy. I run public company. I have access to all these evil banks.
Oh yeah. Oh yeah.
Not so much fun usually. I build big operations, and I'm trying to figure out, like, number one is, has anybody actually done an ICO for a large X infrastructure in energy, whatever it is, a solar farm, wind farm, lithium carbonate plant?
Sure.
That is of any scale. You know, I mean, I'm not, because I deal in hundreds of millions and billions. I don't deal in 5 millions. So has anybody really done it? And what was the difference? Was it a lower cost of capital? Was it access to a broader set of capital? Why would I want to do that?
Well, you're a public company guy, right?
Well, I'm also private. I have private enterprises as well.
Okay. Well,
Yeah.
okay. In the private equity business, you're dealing with people that you're dealing with a limited subset of those of ultra capital,
Yeah,
right?
the
Let's
private
call it
equity
that.
funds, which are horrible.
Okay, well, so you pick your poison, right?
That is-
So, and they got no liquidity at the end. There's a limited subset, and they can't wait to cram you down and get it. They have all the
I know,
leverage.
I know.
Okay, public markets, the first cram down bank of Iowa or whatever you call them. They want a large warrant overhangs and all kinds of great stuff on your
I
stock.
don't do that, but
Market manipulation and all the other.
that happens.
I know, yeah. So look, if you can take power which people want and sell it to them in advance, then you don't dilute your equity, and then that's a benefit, right? And it doesn't mean you don't dilute any of the equity, but you also create a liquidity premium, which you get in the stock market, but it comes without all those problems of the limited subset of people that play in that world, which is becoming increasingly problematic, right?
Is it more applicable to a Reg S type situation or a Reg D, or does it make any
It
difference?
doesn't make any difference. The fact is that you can create an asset that's really attractive to the market and include equity, include access to the power you're generating, serve the community if they can access it, or you can just
Just have a business.
you could just have a business, and you can tokenize the equity in the business, and it's just tokenized equity. And so we're doing this for clients right now in 10 megawatt projects that also involve mining operations and things
And
like
it's been
that.
successful? You've been able to
There's-
tokenize them?
There's interest from all over. The problem is, and Exemplar is doing it, there aren't too many firms that know how to do it.
Right.
Tokenizing real equity, just aren't a
No,
lot of firms.
I understand where the fronting is,
Yeah.
but you're actually saying it's either being done or it's getting ready to be done.
That's right. I
Yes.
mean, it hasn't hit the mainstream yet, but it's being done or it's getting ready to be.
And what's happening now is more investors are very interested in real companies with real track records and that can provide real value. And if you can articulate why that value is exponentiated on the blockchain through a utility token, then you can get non-dilutive equity, really non-dilutive financing very quickly that would come in generally as some form of a revenues, just like Salesforce charges a license or Microsoft charges a license. You create a platform that gives access to the value you've already created and democratizes it. You can do quite well with a utility token. So there are ways that we can look at strategies within the blockchain to take companies that are established out. In fact, we are working on the Kodak coin issuance right now and have a $40 million allocation on that. And that's been,
Yeah.
Interesting.
So I
Yes.
have two questions. You speak in favor of compliance with United States securities laws and IRS. If you're offshore or in another jurisdiction, how do you avoid being pulled into U.S. regulation when you're dealing on an internet platform? Number one. Number two, a slightly different question. How do you deal with the issues of arbitrage and hedging between the platform of Bitcoin and Ethereum and whatever coin someone is creating for their community? And how does that differ from any other issue involving arbitrage or hedging or any of those issues?
I'm going to answer that briefly because it's a technical question, and I think we want one more question after this.
Yeah.
So let me make that quick. If you're offshore and you want to avoid regulation here, don't offer a security to anyone in the U.S., period, ever. Make sure it stays entirely offshore and you're good. And whether that's good for you in the long run is a whole different story. Okay. The second question is, arbitrage and market manipulation and hedging occurs right now in the most magnificent forms unseen in recent time. And the road to regulation is paved with market manipulation. So welcome. I mean, yeah, welcome to the fray. Get in the game or just understand that that's what's happening. It's happening in huge magnitude.
She's had her hand up for quite a while.
Congratulations.
Okay, so there aren't that many law firms that really understand this, correct?
Very few.
Very few. You offer that.
Well, we've been in the space for 8 years, which everything's in dog years in this
Yes.
in this world, right? I mean, it was early infrastructure days. 8 years ago, and a year and a half ago, nobody heard of what an ICO was. So imagine how quickly we have this sort of new lingo and new vocabulary. So yeah, it's very few.
Okay, so can you just explain really quickly, like I have a business that has equity in it. I've been in it for nearly 40 years. I have a worldwide excellent reputation. And so you can tokenize the value of a business?
You better believe it. You can tokenize the value of anything. Anything. We talked about behavioral economics. There's waste, there's people, there's empty seats, there's people aren't in them, there's butts that want to be in seats, tokenize it. Or you got equity, we can tokenize it. Seriously, we could tokenize anything.
Okay.
The question is will somebody buy the tokens?
Exactly.
But if you've got real equity, you got a real business, then you got something there.
Well, we have a network of tens of thousands of people.
Yeah. You could access, and now you create liquidity in what otherwise would be a private business. Now you've opened up an investor pool from only people that are stuck with you for 5 to 7 years and have to replace you as CFO. They don't like you. Anybody who knows the options market, it takes a European option, it turns into an American option. European options are only exercisable at the very end when you sell the business, so they're stuck with you, which means they're going to pressure you. If you have an American option, they can get out anytime.
Right.
And that is a magnificent advantage.
Thank you.
And tokenization actually creates greater liquidity.
Yeah.
Tokenization creates greater liquidity. And another option and another channel for investors to actually then liquidate their holdings.
I want to take this young man's question here, and that will be our last one.
Well, thank you for taking one more question, and thank you everybody who's stuck around. So I'm not an investor, I'm in market research, so I'm more specifically interested in the systemic level than the sort of how-to level. And I guess this is a big question, but there's this balance, right, between finding enough regulatory guidance to create some standards and help people understand what they're dealing with and reduce this uncertainty that you started out talking about, and then over-regulating to the point where you risk sort of quenching this innovation. And I'm curious if any of you have an idea of where that sweet spot is right now and what that might look like, either in the US or elsewhere, or if it's just too early to tell.
I can take.
Yeah.
You give it a start. Oh, yeah.
Well, I would say the most sane regulatory guidance that I've seen so far, and it seems to be trending, is Swiss law, which has really defined, what a utility token is, what a payment token is, and what equity token or security is. And they've said pretty clearly that if at the time that I hand you my fiat or my BTC, you hand me a token, and that token is actually minted, it's ready to be put into my wallet, and that token then can be used immediately to unlock a platform that has true, real value and functionality at that time, then it becomes a utility token, which means that you can do a public ICO in those countries and jurisdictions that follow that kind of framework or just have a very lax regulatory framework. In the United States, you'd probably come up against the Howey test, so a lot of the strategies are, go offshore, do the deep jurisdictional research in order to launch your token sales in those jurisdictions that will allow it to be considered a utility token, put it on an exchange. That's one. Another strategy is really just do an equity token, comply with securities laws, and then sell them as securities and raise your money under a 506C, a Reg S, a Reg A+, or an S1. And you can just get just as much liquidity, although I would say that there's much greater analysis done by investors when they're investing in equity than when they're investing in a utility token.
I might end with a quote from Woody Allen. He said, "Every time I shut the door in reality, it comes in through the window." So look, everybody's coming in through the window. They're going offshore and they're wiggling around because the river always finds a way. When I was a kid, I was making dams and trying to stop the river. Never worked. look, U.S. people want this. People want to be here. They don't want to have to wiggle around. Nobody wants to crawl through the window. Our investment bank is on the phone with the SEC, dealing with them, helping them understand. They need partners. They need people to help them understand what's going on here. And they will eventually make some sensible regulations if we're partners with them. Otherwise, they're going to miss the mark.
Yeah, so you're going to be proactive.
The key is to be
Yeah,
proactive.
yeah.
And people want to be here. And we're actually pioneers in this stuff, but we're going offshore for stuff. But a lot of the pioneering is here. So we need to embrace that. And if we're in a public, I believe there is going to be at some point self-regulation. To answer your question, we're working on helping create a partnership between the SEC and service sector and private sector of companies that might want to tokenize their equity for reporting standards that are escalating and sensical. Because right now with IPOs, they're nonsensical. Nobody can afford it, so nobody's accessing capital. But that can change, and it will change with the tokenization of equity and creating a real derivatives market around securities will help. It's just early days. Hopefully next year we'll have more to report.
Do you have a last comment?
Yes, I would say that when we look at the statement of crypto and blockchain actually creating abundance, it's interesting to see it's still based largely on scarcity creating value. And I think that as we move forward and look at some of the examples of, say, Yelp and eBay and Amazon, where reputation is so important, and we create an economy where reputation is credit, and we actually then utilize this new currency and decentralization to foster greater reputation-based currencies and to bring them into the decentralized local living economies, and we truly decentralize our economy, but hold truly to a reputation-based economy where potentially zero balance is the best thing in your account rather than billions, because we're going to operate at the speed of light. And if somebody needs money for something and their reputation is high, it will show up. That currency will be there. And having this ability to have massive democratized exchange, I believe, will create a regenerative economy.
Terrific, terrific.
Thanks, everyone.
Thank you very much.